Hello and welcome back. The stock market has been performing very poorly in January of 2022, and I was reading that this is the worst January since 2000. And if you exclude the past couple of sessions, things would have been much worse. Hopefully, luckily, actually the stock market bounced back a little bit and got some of its value back. However, a lot of stocks are actually really beaten down right now. And so myself, I love buying when when there's blood in the streets. Obviously, when things are going down, because I'm getting the same companies for a cheaper price. So why not? And so I wanted to make this video to talk about 5 companies and 5 stocks that I would be getting into right now. And this is mainly a correction. It's not really a crash. If there was a real crash in the economy and the stock market, then everything would be going down and down and down and down. And the thing is, in that situation, you would mostly want to buy companies that are like food based, like they offer food, they offer apparel. They are selling consumer non-discretionary products, which means products that people need to buy in order to live their normal lives. So everybody needs to feed themselves, they need to get some clothes, things of that sort. So Walmart would be one of those, for example. Now, let's take a look at companies that I think have been beaten down and have a potential to rise sharply in the next few years. And for this situation, I'm not just adding companies that are consumer non-discretionary, as I mentioned earlier, like what I said about food and all that. Because I don't think we are in this kind of situation right now. I think there is a market correction from which we could benefit from getting some companies that have been lower in terms of price, but they are making strong cash flow and can grow over the years very nicely. And so the first one that I wanted to suggest is Meta Platforms, or mostly known as Facebook. And I bought Facebook a couple of years back when it was 150, really, in the previous stock market correction that happened back there due to the pandemic, really. And it has been flying since then, has been doing tremendously well. Some people may be a little bit fearful of entering tech in this current time frame. I'm not. I think tech will continue moving up, and frankly, I think there may be a stronger continuation in the next few years. That's what I believe about tech. Very important, integral part of our today's life. So, bearing a massive crash, I don't think tech will be doing poorly, and this is why I'm actually suggesting 2 companies operating in that space. First one is Meta Platforms, and as I mentioned, a very good company that has a current forward P of 23, 22.4 here, good cash flow. We're not gonna go into massive details about the company because we're always examining companies in separate videos, so we can examine Facebook later in a separate video, see what is going right now and what's going on right now with the company and the cash flow. But I can tell you that the free cash flow of the company is great. The forward P is pretty good for a company that grows that much. And I think that currently Facebook is probably a very good opportunity for people to enter at this price even. So yeah, I would buy it. So the next one, a company that I'm talking about a lot, Alibaba. Alibaba is a company that has been beaten down massively, has lost more than 50%, and is one of the reasons why I like it, because it has lost a lot of its stock value without actually losing its business value. And so right now it's making tons of cash. It has a PE, a projected PE of 14.4, which is really low, a price to book ratio of 2.3. It has some great growth potential. I don't see much not to like about Baba, apart from the fact that there is some political tension. This is the only thing that I could think of in terms of not buying Baba. But because I think this will dissipate eventually, I'm definitely adding Baba to my portfolio for 2022. No doubt about that. So let's take a look at the next one. For that, I'm going to suggest Johnson & Johnson, well-known pharmaceutical, a company that has been doing tremendously well over the many years, never really had a massive slump. And I love this company because it's also paying a nice dividend, 2.46, has some great PE over here. It's generally speaking a very sustainable company and a cheap company, I'd say. massive pharmaceutical, has a lot of products, and again keeps growing and growing and growing. And this is one of the stocks that most dividend investors invest in, because it's a great dividend yield and a very safe dividend yield. And especially when there's a correction, you can get it as a little bit of a safer bet, because pharmaceuticals tend to do well when there are market crashes, even not even corrections. So this is one that I would definitely add to a portfolio. When we're, if I would, if I were to take the current market slump into account and try to add a little bit more solid value in my portfolio, and also get some income back from the current dividend yield. So Johnson & Johnson is going to be my third pick here. I do like adding McDonald's to a portfolio of that sort that is worried about a potential pullback, continuation, just because it's a very well-known fast food restaurant, and if things go down, McDonald's will still continue selling burgers, if not more burgers, because they are cheaper. And so these kinds of companies that are providing food to people, and also cheap food, and that are massive brands, tend to do well even when a recession hits. And so this is why I would consider adding some McDonald's to my portfolio if I were to think about a potential downturn, even though I would probably not touch the company right now, because I think that there are better opportunities, and their current PE, for instance, their current valuation is a little bit steep. But again, if I were looking to invest for some good and safe dividend, and some good company that's actually going to be serving people through the potential slump, then I would add some McDonald's in my portfolio, and that would be my fourth pick here for this situation. And last but not least, I would add Walmart, another very well-known food and retailer, really, that is a massive one in the US, selling a lot of product, and it's sort of like a discount store. You can get some discounted goods in there. It's paying some nice dividend, and is a company that keeps on growing and growing. Current PE at 50, expensive, 49, but projected one at 21. So company seems to be increasing earnings massively here, at least based on analysts. And also is a company that typically will be doing well if there is a recession. And obviously most companies, if not the vast majority of companies, will fall, but how far you fall matters. And so Walmart is probably one of those companies that will not fall too much if there is some sort of a deep recession here, a deep market crash. And so with the 5 stocks and companies that I suggested, I wanted to add a little bit of diversification here. I still wanted to have the safety of, like, Walmart, for instance, or McDonald's, that are providing me with some income. Yet, because I believe that the current situation is probably not going to last, I do want to buy free cash flow machines like Facebook or Alibaba are right now. And so this is a small portfolio of 5 stocks that could work for most situations. A couple of the first ones were more like growth based and less conservative. The later ones were more conservative, and I think this kind of 5-stock portfolio can be good for most situations that are looking to profit from a stock market slump as it's currently happening, by adding some conservative and some growth investments alike in this kind of small portfolio. So this is what I would suggest for the current situation, and I hope that you can make money during this downturn. I think you can buy a lot of value with a lot of potential stocks right now, just because a lot of them went massively down, and so it may be time to buy stuff. Hope you enjoyed the video. If you did, please leave a like and subscribe. I'd love to see you here. And also take a look at our Discord channel, the one that we have created, and we have a community already of more than 10 people right now, I believe, and we're looking to add more. We'd love you to join us. You can find a link in the description below, and let's talk about all things investing. And thank you for watching this one. I'll see you in the next video. Bye bye.